Welcome back to the channel, everyone, and thank you for tuning in to another video. We are moving into the holiday season, but today I want to actually spend some time with you and just talk to you about, what stood in my way when I first started trading to being able to become a profitable trader, okay? That was 12 years ago when I first started. I had a little issue. I could not read the market correctly. And you individuals that have been following the channel for some time know when you hear me say this, that is extremely important. What is the number one thing, okay, that you should know, you should master, you should really just be able to break down and clearly understand when looking at these charts? I'm not even going to answer that for anyone, okay, because it is covered in all my videos across the channel. I want you individuals, okay, if you know the answer, what is the number one thing that you need to master if you want to make it in this business? Those that have been following the channel already know what I'm talking about. So leave a comment down below. That will, definitely help others, okay? Because I'm sure they're beginners or new traders, those that have passion and want to master this craft that are watching this or came across this video. And hopefully they went ahead and sub to the channel. So I'm going to give you time right now, 5 seconds, to go ahead and click on that subscribe button and drop a like on the video at the same time. But also make sure to turn your post notifications on. So 5, 4, 3, 2, 1. Okay. Drop a comment down below if you know the answer to that question. All right. All right. So that's what, 12 years ago when I first started off, I struggled because I couldn't just simply read the market. Okay, guys, that's, as a whole. All right. I had a problem with that. I thought I knew, price action and being able to follow the structure and things of the market, but I struggled with that. All right. I didn't probably take, I'm gonna tell you this now. I was so frugal when it comes to money, that I didn't drop a lot of money into my brokerage account, because I really wanted to master, okay? I really wanted to become great. I wanted to prove to myself consistency in trading. So I didn't drop a lot of money in there, okay? Yeah, I lost some money here and there. I made some, lost some. I was back and forth like most of you individuals out there are probably doing as beginner traders, breaking even, having a losing trade, making a winning trade to cover the losing trade, just playing the, trying to level out the balance, the playing field there, right? But, so I lost some again and I won some, all right? But again, you have to understand one of the most important things when it comes to this business. We as retail traders, we do not push and pull the market, guys. It's the banks, it's the institutions, it is the smart money, okay? They're the ones that have the funds to be able to put into the market and cause it to move heavily in a either up direction or in a down direction, okay? So what I want to discuss with you today is talk about smart money, okay? And how you can actually gauge it and view it or see it on your charts when you're trading daily, because it's all over, okay? And what you do is you don't want to be trading when the market is choppy, making little moves, making small little highs, small little pullbacks, small little higher highs. You don't want to be trading in that, because guess what? It's not the smart money. It's not the banks. It's not the institutions. It's not those market makers that are actually the drive behind that. You know when they are moving the market, because you will see sudden great pushes in one direction, okay? But they like to play a game, okay? They like to play a game, and I'm going to show you on the charts what it looks like. We're going to take the higher time frame. It doesn't really matter because you can see it all over, no matter the time frame chart. I don't care if you trade tick, volume, time-based charts. It doesn't matter. Range like I do. You will see these moves from a higher time frame down to a lower time frame. So, but I'm just going to show you here on the higher time frame what to kind of notice, all right, when they are getting ready to gear up to make a major move. It is our goal, and this is the reason why I trade supply and demand so heavily, because when I see aggressive moves in one direction or impulse moves in one direction, up or down, okay, I am going to mark zones off and wait for the market to come back to that area, because you have to think very logically speaking, okay? And what does that mean? Well, if I know the market just pushed hard to the upside, and I wasn't the one that made it happen, okay? And thousands of retail traders weren't the ones that made that happen. Well, ask yourself that question. Well, who did? The banks and the institutions. If they are filling orders that quick, and you see large push where you got so many green candles climbing to the upside, and you do not see any pullbacks, okay, in between those candles, all right? Those little voids, okay, what a lot of people, what they are is called fair value gaps, all right? Or even a gap or void back at a zone from where that origination of that push to the upside, that massive push to the upside started from. Guess what? I'm gonna tell you right now, there are more than likely orders that are waiting to still be filled. The market was just moving so fast at a quick direction. The banks, institutions were trying to fill these orders. They couldn't get them all filled. And if they can't fill those orders quick enough, they got to come back to those areas, all right? But it's a little game they play, all right? They collect liquidity at certain areas. They fake the market out as they are pulling the market back to the zone or to the area where they started to make or put in those large orders, okay? All right? So they want to collect liquidity during that time frame. They want to stop traders out, okay? All right, so I'm going to show you what it looks like here on the charts when we see aggressive impulse moves, but prior to it happening, what actually occurs. So we're going to take here the higher time frame chart, okay, just for an example. All right, just you know, today and the day before, and maybe you know, the last 2 or 3 days, okay, and then we'll go back and just look at some other examples. But we know the market on the Nasdaq's been moving higher, right? All right, even on the ES, most, you know, across the indices, right? All right, so if you trade future markets, guys, this is the channel you want to follow, okay? If you trade the indices, the E-mini S&P 500, the micro MES, the Nasdaq, you know, 100 futures, I don't care if you trade the Russell or the Dow as well when it comes to the future markets. This is the channel you're going to want to follow. So examples here, I'm going to show you here on the chart. Let's go ahead and talk about it. I'm on my 60 range chart. But again, you can see this type of activity occurred regardless of the time frame or chart style. But anyways, look, what happens here is the market is making these higher highs and higher lows. You ever heard me say, and I say it time and time again, the banks, the institutions, smart money wants to buy at cheaper prices and sell when the prices is higher. Okay, we do this too as retail traders. You should want to, okay? Don't buy when the market is, you know, at a high price, okay? Don't sell when the market is at a low price, okay? So they're always looking for opportunities for one to purchase, okay, when the market is lower or the price is lower, okay? Two, they want to take out areas of liquidity. I mean, they want to stop you out. They want to hit sell stops before pushing the market higher. So they're stopping orders, okay? Collecting money. It's like Pac-Man moving around and getting fueled up, okay? All right, by eating those things as it's going around the maze and fueling itself up to be able to you know, go after those ghosts and so you can win the game, all right? It's a strategic move, okay? So the market moves higher, making higher highs and higher lows. Look what happens before it made this massive move to the upside. Who do you think made that move right there? Yes, the banks and institutions, okay? Look what fueled that. All these green candles, which means that loads of buying activity. When you see such massive moves like that, you got to say to yourself, well, who caused that? All right, it's the banks and the institutions. You got to think that way, okay? And I want to show you what happened when price or the market retraced pretty much back to that zone. Now, this is a zone where I talk about, you know, things are being tested versus untested. In a sense, low probability versus high probability. This is a tested zone, okay? And if you don't know what I'm saying when I'm referring to low probability and high probability, I'm talking about I like to see a zone. In this case here, this would be a demand zone here, where the market left a void or gap at, all right? It makes the trade more high probability when the market retraces back to that zone. I'll talk about that as part of the strategy here on the channel. And I give away the strategy for free. I go into detail, guys. I want to see people succeed and become profitable, right? That's just the end-all game here. And that's why I create these videos. It's you know, not for any monetary gain, just simply for the fact is that I told myself when I get in a position for my own self that I will pass things forward, okay? Because that's, to me, ultimately what people should do is not harbor information, share it. All right, so again, the market before it made the sudden move to the upside, look what happened. It started making lower lows and lower highs. Doing what? Taking out structure to the left-hand side. So what does that mean when it's breaking through areas of structure to the left-hand side of the chart or taking out levels? Well, they're hitting sell stops. They are running and stopping orders out. They're collecting liquidity. So when they capture this liquidity here, okay, they move it lower, stopping traders out. All right, they are basically ultimately aiming for a lower price. Okay, so they start to take orders out, all right, and then or stop traders out, and then boom, blast to the upside. They start filling orders. Okay, so as a retail trader, what you want to do is wait for the market to retrace back to this zone here. Again, this is already a tested zone, so just be careful when you see the market return to a zone like this right here, to where it's already been tested and there's no void or gap at. So this is a zone, and it does come back to it. Not immediately, but into the next session around 1:20 in the next day. But when it comes back to it, look what happens. Again, this is aggressive area buying, all right? So there could have been orders here that were left over on the table that didn't get filled. The market retraces back to it. You look for rejection once the market gets back to it simply being, again, it's the higher time frame, so I don't take my trades off the higher time frame. But you will see setups just like this. Excuse me, guys, I hit my microphone. On the lower time frames, and you wait for it. I go into detail about the strategy and how I use it, okay? About marking zones from a higher time frame. Wait for the market to come back to them. Look for rejection, okay? Wait for the market to return back to the zone. I'm getting a little excited. Off the higher time frame, whether it's supply or demand. Then you move down to a lower time frame. Look for a certain setup and take your trade when the market pulls back to a new, fresh zone. In this case here, a demand zone, because we're moving higher on a retracement back to a higher time frame zone. Move down to a lower time frame, look for that same setup. I talk about it in tons and tons of videos over and over. Just do yourself the favor and subscribe to the channel and watch the videos, okay? You can educate yourself simply by watching the channels. You don't need to pay for a trading course anywhere unless you want to pay for them, or you don't have to pay for some mentorship program somewhere. Keep the money in your pockets and watch the videos and educate yourself, okay? I provide the content. It's just up to you to be able to educate yourself and watching the videos, spending time. It's no different than you just going to or sitting in a class somewhere, listening to a lecture or going to a seminar and taking notes and then reviewing them and studying them and then, going about what you need to do. Okay. The same thing. Okay. Tons of videos. I have over 600 videos on the channel. You can spend time watching the videos. All right. So that's what I'm talking about is the market, the banks, institutions, smart money likes to get in at a cheaper price. But they want to definitely collect areas of liquidity. They want to stop traders out. Okay. All right. Get fueled up before they make that sudden charge to the upside, all right? And then we as retail traders want to wait for the market to retrace back to the area, and when it does, look for a golden opportunity to go long. And you see what happened here. There was an opportunity when the market pulled back to this area to go long. But again, you don't take the trade off the higher time frame. You move down to a lower time frame and look for a setup, which I talk about using multiple time frame confluence. All right, using a higher time frame and then using your entry chart, looking for the setup. I go over that strategy. Okay, I'm gonna say it again, time and time again. All right, in the videos, I break it down. All right, we have people in the Discord community that are using the strategy that are doing well themselves. So if they can do it, you can do it as well. Okay, all right. So pay attention here. Okay, I'm kind of squeezing my chart together, but that was the prior high, right? On this move to the upside. The market starts to make moves down, okay? All right. This here, if we break above this area here at 16,048, that's a major area structure. Break to the upside. But they are what they're doing is running the market lower, collecting all this area of liquidity, stopping traders out along the way, okay? To basically get into a better price area to position themselves to start making orders and pushing the market higher to break structure back to the upside. That's all a game. They break structure back here to the upside. Once they do that, what are they doing now? The market is going to move that way. It has to with its ebbs and flows. It's like the banks have to recharge themselves by collecting your money, by stopping retail traders out, by blowing through these sell stop areas to position themselves again, okay, to do what? Get into a cheaper price, stop you out, get refueled to push the market higher, okay? So they took out this high right here, breaking structure to the upside. Then they start lower lows, lower highs, breaking through these areas of structure, breaking through levels, recharging, position themselves into a better area price, and then boom, blast to the upside. Massive buying, massive buying. Who is doing that? The banks and the institutions. We as retail traders want to play in that game when the market pulls back to key areas, in this case here, of demand. So you just wait for the market to retrace back to areas where the aggressive buying started at. Again, this right here could be a zone, okay? All right, right here. This right here could have been a zone, but the market broke through that shortly after the opening. So it could come down to this area right here. Again, this is a higher time frame, so I'm not looking to trade off the higher time frame. But if the market was to tap into this area, I'm gonna move down to a lower time frame to see if we get activity, okay, which I talk about, which is part of the strategy I look for on my lower time frame. Basically, a break of structure above. Pull back to a key area of demand on the lower time frame. Look for the rejection to go long, okay? I'm still looking to move in the intended direction of what was happening here on the higher time frame chart. A high, okay, pulls back, makes a low, higher high, breaking structure. All this could just be a pullback, okay, to basically refuel again to push the market higher. So when the market pulls back to a key area of demand, okay, I'm looking to see if I can get into a setup, all right, off my lower time frame to go higher, okay? So what I wanted to talk about again was just follow the movement of smart money. They strategically are playing the game correctly, and you need to trade, you need to trade it for one with them and play the game and see their moves unfold. The charts don't lie. Like they always say, money doesn't lie, numbers don't lie, okay? Or numbers don't lie, like I just said. The same thing, guys. You've got to be able to pay attention to what's going on in your charts. Allow your eyes, but you've got to be able to read it. And again, there's that one big part to trading that you need to understand and grasp right up front. And those that know the answer to that, please again drop a comment down below. All you got to say is it's just two words. That's all it is. All right, it's 2 words. Okay, so but that's the reason why, again, I wanted to talk about and make this video for you guys today. You know, I lost money because when I first started off, wasn't a lot of money, okay? Because I quickly pulled myself from the table and said, no, I'm shutting this down until I can turn this around, right? I didn't want to be like a seesaw effect, be up and down, up and down. I wanted to show myself consistency and be able to be profitable so I could do this daily and make money, okay, guys? So, we're a little hoarse there for a second. But anyways, I don't want to see you guys lose money. I want to see you make money, okay? So understand what's going on behind the curtains. Be able to see through them or behind them. And then again, trade with smart money and not against it, okay? All right, I appreciate everyone tuning into the videos on a daily. Again, we're moving into the holiday. This probably, well, I'm not going to say this is going to be the last video, but it's probably the last trading day for me for the week until we get into next week. If you're interested in joining the Discord, like I said, please find that link down in the description portion of the video. If you're not a subscriber, please go ahead and take the time to sub now. Click on the subscribe button. Make sure to turn on all your post notifications so you never miss one of the videos because I pack them in on the day. Okay, I'm making videos left and right daily. All right. And last but not least, please drop a like on the video. I see everyone on the next video. And if you are celebrating the holidays, Thanksgiving, please be safe, guys, and have a wonderful holiday. Thank you, and see you in the next one.